Hello. Good morning. Let me smooth out the music. All right. Good morning. Good morning. Hello. This is supposed to be a tutorial. What I wanted to do, because I'm approaching a time where it's just time to release the Pro indicator, the SNDR Origins indicator, Market Structure Pro. It's the actual real name. I thought I'd show you how to use it. There's many ways in which you can use something that highlights market structure, but what I want to do it's guide you through what you can do with the indicator, so that if you are interested and want to subscribe to it and try it out, then you know what to do, because it can be overwhelming turning on all the settings. It will completely clutter the chart with everything that you can possibly see in every possible zone, mitigated or unmitigated. So I wanted to show you a little bit how you can think about the indicator, where it can help, how you can, you should turn on or off, just to check what's happening if your eyes don't help you already. So as I said many times before, you don't need this indicator when you should not need this indicator. You should develop your own sense for market structure, recognizing the models that you want to trade that have a high probability of repeating same moves, where you can take small risks for big rewards. That you can do without indicators, and you should do it without indicators. But indicators can help train your eyes and make automatic something that sometimes requires some discretion. So I use it, I love it. You don't have to, just saying. So I just want to show you how you would go about, with a little bit of hindsight, because I know there's some very strong trades that I want to show you that you could have caught with the indicator or just by reading order flow and market structure. And I want to show you how you could use the indicator during a trading session to take amazing trades. So we're talking about the 20th of November, 21st of November. We get to 22nd, Friday of November, during the London session. So this crazy week was, I was just checking out what was happening by zooming out in the 1 minute chart, and you see this was closing of the markets when the NVIDIA results came out. This is NQ, of course, the Nasdaq futures, the micro, and there's this crazy drop returning up to almost closing this gap, then going up. And if you see, there's this fractal structure where the drop and recovery of the NVIDIA earnings at the close of the day, so basically at market close, gets replicated almost exactly at 9:30. So basically funds that could operate immediately in the aftermarket, they did it, and then the big money came in at the opening of the next day and repeated basically exactly the same pattern, right? I found that fascinating, but this is beside the point. So what we want to do is, like, okay, previous day we have a previous day high, previous day low. You don't need my indicator to mark this, but I do have an indicator called key levels. That is just a slight adjustment over other open source indicators that do that. It just matches my style of how I like things, minimalistic. And so we're working inside of this range, basically from the previous day, and the new day starts here midnight. The actual close of the markets and reopening of the markets happened at 6 p.m. the previous day. 5 to 6, there's 1 hour gap in the market that you can see here. So we generally arrive at the charts between 1 a.m. to 2 a.m. in London time. That is the morning of where I live. And what I usually do is work towards understanding what's going to happen between the Asia high and the Asia low. So the session of Asia starts, I mentioned it a few times, 8 a.m. Sorry, 20 New York time till 24. It's a range that gets built, and it's the overnight Asia session. And on that, in that session, you get the swing high, swing low, and a certain range is created. Then a London session will use that as context. Sometimes it will take both sides, sometimes it will take one side and run, and the whole day, let's say, can use the Asia range, the overnight session, as context for the trading of the previous day. So where are the zones? Where's the market structure? Yeah, so we'll get to it. What I want to show you is that during the Asia session, there was a high, a big drop at 10, it ends at 10:30, and so we create this range. And if whatever style of trader you are, you know the Fibonacci retracements, and so before market will continue on a side, often it will retrace between 62% to 79% of that specific range. So as you can see here, around 3 a.m., we do retrace up to this optimal trade entry level, Fibonacci retracement level, 70% retracement level, however you want to call it. And if your bias is towards a bearish move, then you could look for shorts, right? So notice, I don't know what school of trading you do, but it's something that I do, coming from first the ICT school of trading, then the more market structure oriented schools like DTFX. We consider that when the market leaves levels that are very close, almost equal, there's a lot of orders resting and sitting. Actually, I wrote the wrong one. There's a lot of orders sitting below equal levels. And so because the market is always constantly looking for liquidity, the price should give opportunity to everybody to enter the market and participate. What that means is that the price will tend to move towards where's the orders. Price has to be fluid. Liquidity is what moves the price. So if there's an area that ideally contains a lot of orders, price will tend to get there once it has consumed all the other orders in the range, or because an algorithm moves it there. We will never know. Or maybe one day we'll know. Anyway, so if we had a preconceived bias that, there's a lot of liquidity below this level, we might build a narrative that we're in the Asia range, there's a high and there's a low. We are hovering around the midnight level at one point, so we are above the 50% of the previous day, so we are in premium of the previous day range. So shorts should have a slight preference for that. We can expect at one point a move to happen. And moves happen sometimes. The London Open push of volatility will happen at a random time. Well, usually it's a very regimented and scheduled time. So the push can happen at 2 a.m., it can happen at 2:22, at 2:33, it can happen at 3 a.m., 3:30, and sometimes at 4. All right, so keep these numbers. So it does happen at the turn of the hour or the half hour, and when the push happens, it's very violent. So the skill of a trader, especially trading London session or New York Open, is to be there at the right time where the push of volatility happens. Okay, this is for the general outlook of this, so then we can look at the market structure to try to give us more insight into what's happening and which levels we should look at to eventually try to get involved. So let's go back and turn on the market structure indicator. So when you install and add the SNDR Origins Pro, the defaults, how I'm gonna set up the actual defaults, I need to think about it, because if I put everything on screen that's available, you will be completely overwhelmed and maybe put off by what's happening, because A lot of clutter will make it not clear what's happening. A little bit less and too little, you will think, what's happening? This looks like exactly like the free indicator with nothing extra added. And you will be right, because now I disabled all the extra features so that I can show you just the plain market structure. Okay, so I wonder if I should show you how the indicator would look if you would show. Yeah, maybe let's do that. Okay, this market structure situation with break of structure, market structure shift, protected levels, and the current asset, the current setup of the market structure you can get from the free indicator. It's called market structure. There's a link in the description. You go to my website and you can install it. But the new one I've been working on can show you many things more, apart from mitigation of levels and other things. So one of the major things I added was the SNDRs and the origins. Now, if I turn everything on and I don't, say, remove the mitigated areas, you come and look at the chart in the morning, and this is how it looks, right? So what's happened, and it is impressive. It is fancy. You can see bounces all over at areas that are actually marked, but it's very messy, right? So it's very, very messy. You can customize the look, make it more minimalistic, but it's a lot of information that maybe at a certain specific time you might not need. So what I want to say is that any indicator, yeah, some indicators give signals, buy here, sell there. Yeah, sure. If you can get them to work, more power to you. But in many ways, indicators are just helping you make the right decision at the right time with the right risk management. So if you don't have an idea where price is going to go, which levels are going to be breached, then I don't know if the indicator is going to be a lot of help. What happens though is that the indicators will surface a lot of information that might help you make the right decision at the right time. So let's do it this way. Let me hide everything and then build a narrative around what we think might happen and then work from it. Okay, so let's go to the actual. So I have the charts, and if you would take at face value the current external market structure, so not the internal one, you would see that. So by the way, I'm using right now the weeks, so a week based zones, which many people are using. People who follow AFOP or Dave or Stoic, they use week-based zones. And so let's use those. As you can see, we had a break of structure bullish. We broke this level. We broke this other one, and then we had a sharp move down. So this creates a new bearish zone. We're in the bearish stance. This is the Asia high is now the protected level. So if you look at this market structure, we're bearish. We were going to have confirmation that we become bullish only if we close very strongly above this Asia level. When we are, as we were discussing, we are reaching the OTE level of all this range. And not only that, but look, the indicator already gives you a very, very good hint that possibly there's going to be a short coming. And that is, here's a zone. Very clearly we broke this structure. And so 50% of this zone is the mitigation level that many people use. And so we come here and we do a double top, right? Now let's see if we want to go a little bit deeper. We're now interested, this is what I wanted to tell you, basically is the main point of this video. You have a narrative that you're building, and then you can see exactly, without having to draw them yourself, some structures that might help you take trades. So we think price might go for short, injection of volatility around the right time during London. So let's see bearish origins that haven't been mitigated yet, or bearish SNDRs that haven't been mitigated yet. So we prune the mitigated areas and we only show the SNDRs and the origins. And as you can see, now there's some overlap, so we need to pick what to show. I want to show you why this happens. So let me hide the SNDR for now. Okay. So as you can see, this is a zone. We broke to the downside. We mark 50% of it. And we are doing a sort of a double top, double bottom, double top, double bottom at 50% of a zone. So this in on itself, 50% of the zone, double top. You could enter at the close of this and just take your 1-to-1 or 1-to-2, however tight yours your stop. But the indicator draws you that here there's an origin. And the origin can be drawn as the last candle in a certain zone, or the last downswing in a bearish zone. And in this case it draws this because there's actually a swing. You could also consider that this is the origin, but you know, mechanically the actual swing, the last downswing is that one. If I hide the origins and just show the SNDRs, let me show you. Why does he mark this as an SNDR? Well, it's the last up move before breaking the structure. It is true that there is a fractal here. Basically, my indicator will not pick up on this, right? So we did do sort of a double top in this area, which is the fractal that actually then broke the market structure by a tick. Or you could say a slightly more pronounced swing. We could consider that as the SNDR. But since we're close to the origin, you might want to call this origin. Yeah, okay, this is how, in this specific case, the indicator draws it, because it follows just mechanical rules to draw it. As long as you understand what's happening and you have a narrative in mind, the name you give to a specific, you know, retracement pullbacks in an area, it doesn't really matter. But you know, just to be absolutely clear, you could also consider this sort of the origin of the move. So the indicator will mark how many taps a certain zone has received. So if I slide back to here, you see that it marks the SNDR, but it doesn't say that there have been taps into it. So let me scroll up. It might take a while because I also have a, okay, so there's a run up and it marks that has been tapped once, and then it has to completely leave the zone. And if after having left the zone it comes back to it and even wicks it, this is current implementation, then it will say, hey, actually this zone has been tapped twice. And as we know, that's what was happening. Okay. And we continue to the downside. Okay, so that's an area where you could say, okay, I see a double top, it closes below, let me enter and take a trade up to here or up to this origin, see what happens. But that's not the trade I want to show you. So you would have already by let's say you enter market at the close of this, you put just a 1-to-1, and you would get you know, a nice reaction. What's the time? It's after 3 a.m. This is not usual. Well, the 3:15 push, it's something that sometimes happens. You might want to wait for the 3:30 or 4 a.m. push. As you can see, we did come to take this level. This level was, so the trade, the 1-on-1 was given on the double tap of this SNDR. You could be happy with that. I try to look for situations where I can get 2 bars or more. And what I want to show you is, I don't want to miss it. Okay, so what I wanted to do is, we're building a narrative. We know that at one point the expansion of the 4-hour candle that goes from 2 a.m. to 6 a.m. is going to come. We now have seen that we are at the OTE, so the Fibonacci level that would of the entire Asia range. So possibly we have an idea or narrative taking us price, taking us to the Asia low. We've done a double tap into this SNDR, and we had a break of structure inside here, internal, and we're retracing. Now, this is where you can get fancy with your entries. It's perfectly fine if you want to trade, or if you only have access to the 1 minute, to the minute charts. It's perfectly fine. I have very, very, very profitable friends that never go below 5-minute candles, and they are monsters. So what I'm going to show you, that we go down to the 15 seconds or the 5 seconds chart, is fancy. It's nice. I love it, and allows me to put tighter stops into my trades. But do not be carried away. You can do that. You can be a profitable trader, with higher time frame candles always. So this is what I want to show you. So we build a narrative. On the 1 minute we did a double tap. There is some retracement. We still think we might go down here. Can we analyze the market structure in a lower time frame and see if we can have a sniper entry, if the price is going to give us a chance, right? Okay, let's see. We're doing it live. Okay. The same thing that we saw market structure in the 1 minute. As we keep all the narrative that we've been building in the 1 minute, we can refine stuff in 15 seconds. So as you can see, there's some market structure happening here. Let me do it like this. I want to show this only in current interval. Current interval only. Okay. So let's see what's happening. So now we're in the 15 seconds, and we're looking at the market structure, in like immediate market structure, without having to zoom too much out. What do we see? Okay, we had a break to the downside. We took liquidity at that level. Then we had a break to the upside. Now we are bearish, expect bearish continuations. So we could look for SBS, swing breakout, breakout sequence. So we can start counting. Let's say 1, 2, 3, 4, and then we came back up. Could not close. We came back up. We swept again, and we're going up. So maybe a 5 is going to happen here. Let's see what the market structure we can see if we turn on also here. We're interested into bearish structures, right? So we're going to show the bearish ones. We want to prune the ones that have already been mitigated. Shall we use the origins? Okay, let's see what the origins show us, right? You want to see the bearish origins? Yeah, it will show a whole origin because there's no actual swings. So let's remove the clutter. Sometimes it's very useful, sometimes it's less useful. Okay, so if you see, actually there is, the last swing high before breaking down. I don't understand why it misses this one, but Okay, let it draw like that, and we need to investigate. So it says it's already been double tapped because, wait. So we have a drawing that says, okay, this is the last tap move before breaking this level, right? So we came to 50% and we had a strong reaction. You could have, by the way, taken a trade from a first tab into an SNDR, targeting the low. But as we know, price doesn't go in a straight line, so it's very rare that tap and then continue, unless there's a very violent volatility moment, an injection. So you can see we come back twice. The indicator marks it as a double top, even though I might configure it that it will mark a double top only above this level. And let's see if we can refine. What we're gonna do? We did now a double bottom. We failed again to put in a new low, so probably we're gonna go high. Okay, now we have violated this SNDR. It's showing something here, which is interesting. There is SNDR here that hasn't been tapped, and there's equal highs. So as I was trading this, I was a little bit thinking, of course, there's orders here, there's an untapped, there's an unmitigated SNDR. We might go up there before we move down, but that thing never happened. Now, don't ask me how I know. So now, if we're counting the SBS, sometimes the 4 price comes back and liquidates the 4 before moving down. So this would be a moment where below this, well, I would like always to see, a breaker. So actually a wick coming back up and then closing. But if you feel confident, you could maybe take this. And we went from a 20-point stop to a 9-point stop, refining this trade, if you remember. The target is still Asia low, by the way. So that will be 9-point stop. Is this the moment? What time is it? The other thing you need to remember is that these moves happen at specific times. So 3:30 is the time where you want to 3:33, 3:30 is a time where you want to check what's happening, but we had a failure here, and 3:30 actually pushing up. Is it a time 3:38 for pushing down? I don't think so. Generally, those times happen, so the push happens either at 3:33 or a little bit later or around 4 a.m. Okay, so suspicious. We could try and take this and see if we get a loss, or wait. What time is it? 3:50. Well, this trade, by the way, I think it will work, but what I want to show you is that when it gets to the right time, 3:50 to 4 a.m. 4:10, it's when actually the injection of volatility will happen. I honestly don't remember what happened. So we start a consolidation until we get to 4 a.m. See, we start to chop, and price needs to make a decision. And Asia low. All right. So that was the entry. So I was not sure just because the time was not right, but yes, as I marked it, this is the 9, and we can hold until Asia low. You got some chop until the actual move, the deciding move, started at 4 a.m., which we had anticipated, and then you had to have a strong will to hold through, you know, a little bit of retracement. You never went into drawdown. Now this is interesting because you know, I've seen what has happened, and you would have had 120 points actually of vertical run, because when it's the moment where the volatility push of the 4-hour expansion happens, these runs are happening. So in this case, price had waited and waited and waited until it could not hold it anymore, and it was time to expand the 4-hour candle, and that is actually 120 points of vertical move, and all was highlighted by, you know, the indicator. If you have a narrative, you can then see the structures that are relevant. Let me show you also here what happens if you don't have a clear idea about what you want, and you want to see all unmitigated zones. So how the charts would look if you turn everything on. So as price develops, it's actually nice to see, oh, it's bouncing over an SNDR, oh, it's bouncing over an origin. If you do not expire, so let me actually do it like this, might be very useful to go back here. Everything is turned on, but let's move the mitigated zone, which is how mostly I also use it. I'd want to see also, I want to prune the mitigated zones. Okay, so it will just show me the zone areas, all the possible SNDRs in price. So that's how I can anticipate, if I have a bias, where areas where price will become very sensitive. So here's the first tap. We are looking at 15 seconds cancel. See here, this is also how you build the narrative. This is the bullish SNDR, right? Bullish SNDR that we need to check, contrast it with this other one. Which one is going to be the you know, order flow battle? Right now, you see, this is the beauty of the indicator, by the way. Maybe I should start with this. We came back and we are bouncing at exactly 50% of this origin. So you might think, okay, this SNDR has given a how you say, reaction to 50%, and we come back down to test 50% of this origin. So you could take this short from the SNDR to the half of the origin. All right, then we go back up, we come back down. We come back and do a double tap into an origin, double tap into an origin, fail to take the low. What's going to happen? We go back up. Yes, so you could have taken a long at the close above this candle, and you would have been right, because we came back up and retest the SNDR, this area responsible for breaking this. And here's where the gold happens. So we now come back up into the SNDR. We are inside this origin. We reach 50% of this origin, or 50% of this zone. We have a double tap. So this is the famous double tap. It's another double tap inside the double tap, right? Yes. So double tap. This is the how you say, the recursive analysis that I originally wanted to do when I got carried away. Apologies for that. So you see, we have a double tap in an SNDR on the 1 minute here. Then price cannot really close below here. It has a retracement, and it builds a double tap into an SNDR at 50% of a 50-second zone before continuing. This is beautiful, and this is also the AFOB setup at the right time, at the close of the 4-hour candle, and that's how you get this crazy, oh, I wanted to do crazy runs that you can go press play, because we were waiting for 4 a.m. so you could have waited at 4 a.m. and then you get the insane run. Let's see actually that it was tracking a bounce on on that origin, and off we go to the races. Okay. I wanted to do a tutorial of actually all the features of the indicator. I ended up doing something else. I hope it's useful. You guys let me know. I did take this short, by the way. I did take 2 shorts in this. I can go and collect it and show you. So all these analysis that we done together. Just give me a second. Right, 1 second. I did take this. I did take both. Let me show you. 2 trades. Oh, sorry. I was sneezing. Okay, so I did take 2 shorts. I'm looking for a screenshot. Yeah, 4 a.m. Yeah. I have this one. Save as. Downloads. 1 second. Right. Okay. So this trades, so as you can see, I actually did take it, well, I just didn't review before starting this, but I did take exactly at the break. I did enter exactly at the break here. So the break here, not exactly at the top, at the close, at that close. I entered at the break, I think 801. And then, yeah, so a few times I took some profit or got break even and re-entered, but I even added, right? So I went short 5, added 10, held till here, and then I expected the price to continue and held until here. So there was some jiggling, but I did take these 2 legs targeting the lows. Okay, so I did enter at this break or this break here. Okay, I think this is something I wanted to show you. Did it highlight how powerful is this indicator? I hope so. Some of the level that has highlighted here is not correct. So we'll need to check why the SNDR is drawn like this. I think let me play with it and see if I can just maybe the pivot setting. Let me see. Remove the origins. Change the pivot setting to 1. Yeah, all right. That's all right. For people that will be patient enough to stay till the end, there is a setting that decides how fine-grained the SNDR are going to be drawn and how many candles to use for the swings. So I don't do that for zones because it's not needed, but for SNDRs, because they are not, they're looser rules. You have to decide what makes up a swing point. Is it 3 candles ICT style? Then you have to set pivot to 1 to the right, 1 to the left of a high or a low. or 2 for a fractal structure that has 5 candles, with 1 being the high or the low in the middle, or 7 candles and stuff. So at default I set it to 3. It gives a little bit more room for SNDRs, but in this case it will pick a little bit more, too much price. So set it to 1, and you actually have marked a more tight and compact SNDR zone, and you can still see we came and did a double tap precisely. You could have entered here or wait for 4 AM for this break and then go. Yeah, as I go through it, I realize what actually happened that day, that morning. Right. I hope you found this useful. Let me know. How shall I title this? Maybe tutorial market structure into how to use the indicator. Yeah, something like that. All right. Thank you for watching. I'm just gonna now upload this and hope you enjoyed. Thank you. Bye.